And everybody, it's Tim Reazor with Revere Asset Management. Let's see here, just before 4 o'clock here on a Wednesday night. So quickly, stock nerds, market lovers, before you and I begin. Look, I don't want to bury the lead here. Today, Fed Day. I want to talk about that for a few moments. I want to talk about, well, Fed minutes release day. So what they talked about at the January meeting. I want to talk about shorting, where a possible short, and then how about short squeeze? We'll just put squeeze there. Potential for a short squeeze. So if you don't get the short at a level I'm going to give you, maybe you get a short squeeze, and it makes this market incredibly difficult. And then take a look at a couple earnings plays and what I think is one of the biggest things you should be looking at, and that's the VIX Futures. And so we'll take a gander at all of that. Before we begin, stock nerds, market orders, you know that these videos are for your edification purposes only. They're never ever be misconstrued advice. Also, if you have any questions, take umbrage with anything I'm saying, you can always email me to revereasset.com. I want to talk to the guys who make the decisions of the portfolios, what goes in the watch list, what goes in the portfolios, the buys, the sells. Hunter and Don are always available to you, 855-732-5932. And I tell you every week, it's because I mean it from the bottom of my heart, whether you're a client or not, we do all the life planning for our clients for free. I know people want to nickel and dime you at stripmalladvisor.com. We don't do that. We don't do any of that. So if you're a client of ours, we do all your life planning and always guide you through that. But if you're not a client, you just have questions, please talk to us. And I cover that a little bit on the podcast this week towards the end, where I talk about how we help a bunch of people when it comes to especially like life insurance. The time to be talking about life insurance isn't when you have that event occur. It's well before, and we can get you. We don't sell any of those products. That's the whole beauty of what we do. We don't sell insurance or do any of that nonsense like annuities. So we can give you straight scoop. And Danny, quite frankly, by the way, the podcast is right here, the February 11th podcast. So we can give you the straight scoop. And Danny, as America's fiduciary, is one of the best at telling you exactly what you need and how to go about achieving your goals. And so with that, of course, these videos are for edification purposes. I just want to make sure that you, in fact, understand it. So let's do this real quick. Let me show you the story of the today. So here's the SPX. And so we'll put this on a 5-minute chart. So we're going to look at total index. Normally I look at the futures with you. Tonight, we're just going to do the straight index. So here's Wednesday. Wednesday starts here. And then you can see we trade lower, and then we trade in this bowl, and we trade up higher. And you're like, well, what gives? And so the Fed minutes. So like right in here, at 1 o'clock Central, the Fed minutes are released, okay? And so now you got to understand something about these Fed minutes. The Fed minutes are released, and they do not have, when the Fed last met in January, they didn't have February's inflation report. And so the fact that they weren't talking about an emergency rate rise in January, I'm not sure how much that matters. I mean, they can still come out tomorrow or next week and say, you know, we're going to raise rates by 0.25% or by 0.5%. We're not going to wait till March. Inflation is out of control. They could do that still, just because they weren't talking about it in January. They didn't have the report that came out just last week. They didn't have the CPI from last week and the PPI from this week, and it's kind of a big deal. But the market took it as relief, and so the market rallied from its lows. And you're like, Tim, rallied? It's only up 4 points. Market's closed flat. It's a victory for today, my friends. And so if you're a bull, it's a victory for today. So let's take a look at this, though, on a daily chart. Let's get this to a daily and just show you a couple of things. And so like all these moving averages, all this overhead resistance, that exists, but it's this one, the pink line, the 21 moving average, I want to talk about. And it's easier to kind of look at it a little bit more objectively on an ATR chart. An ATR chart, real simple if you're new to my work. So we're on a daily, right? Daily chart. Now you can see right now the S&Ps are moving every day about, this is, by the way, that is plus or minus 80, almost 85 points. That's a big range, folks. And so S&Ps are moving about 85 points a day. And you can see down here is the chart. So when markets are quiet and bullish, you know, look at that. That's 50 for a reference. And now we're moving 84. So it's kind of a much bigger range. Now, what do these lines on the chart represent? They represent the mean. So right here is the 21 exponential moving average. There's +1, +2, and +3. Well, +1 what? +1 of these ranges, +2 of those ranges, +3 of those ranges, hence 1, 2, and 3, and then -1, -2, and -3. And you can see from the depths of hell, we come from -3, come back to the mean, can't really get too much traction, and now we're kind of right back up against the mean again. Here's the thing. This can do two things, and I know this isn't going to be helpful, and that's what's making this market extremely difficult. Above this level, you always can take out these two recent highs, get up to this +1 ATR. That's almost, we're going to call that 4,600. You're trading at 44.75. That's a good rally for this market, okay? If this area at 40, it's at 4,500. This area at 4,500, keeping in mind you're at 25 points away, serves as a resistance. That's a battle. The 21 is going to be a battle. I could be wrong. I always reserve the right to be wrong. I don't think you're going to slice that through hot butter unless you get some kind of news like you did yesterday, where Putin is good, and today, is he so good? I'm not so sure. And so, yeah, I think the battle's at this 21. Do we get there? I don't know. You're going to need some things to happen to get there and slice through it. And taking away a risk factor could be one of those things that happens. So with that, let's take a look at the NDX, the NASDAQ 100. And so on the same exact chart, so you can see the NDX. What does the NDX do? Let me get my mouse, which I lost. Where did my mouse go? There it is. Look at this, folks. On a daily, 384 points, okay? That is what they call some movement. And so here is the mean. 1, 2, and 3 to the upside, -1, 2, and 3 to the downside. And you can see we're not as close to the mean as we are in the SPX, but could we get up there? And if you take out this level, and I'll just draw, and by the way, let's just draw a shanty trend line here. So like if you break past the mean, there's a good chance that you scoot right up to 15,000, which is 400 points away. That's a good rally, my friends. And so does it get there? Is this market strong enough to do it? I don't really know. And a couple of things are going to factor in there. So like, how about Nvidia earnings? Nvidia is a pretty big stock, folks. And so it affects the S&Ps, it affects the NASDAQ 100. And you can see earnings tonight were plus or minus 25.7, and we're trading flat here. That's not bad. Trading flat's not bad. It's not driving at the moment, and this could change by morning, could change after the conference call. It's not driving the Qs or the ES zoom. If it starts catching a bid and it starts moving higher than this 265 area where it went out, yeah, but you can see right here, it's flat. So that's not a zoom type situation right now. And you know, like, well, what is a zoom type situation? Let me just, not big enough to affect anything, but look at DoorDash here. So DoorDash just was plus or minus $16 going into the print. You can see it's trading almost at 120. We'll just call that 124, 125. But look at DoorDash's chart. Right. So I mean, yay, you know, like if you've held from 257 here just last November at the high, and now you're trading 125, you know, a lot of wealth has been destroyed. A lot of dollars have been destroyed here in DoorDash, but certainly not a bad reaction. And if you're going to look at Nvidia, a much larger mega cap stock with implications to the Qs again into the S&Ps, yeah, and so you're just trading flat here. You know, but if you start losing ground, if the markets start losing ground, and the semis start losing ground, like that is going to affect the Qs. That makes the Qs bearish. Yeah, markets probably meander, if not struggle, if that were to happen. So just be aware of where you are in time and space. AMAT reported too. I think AMAT's up. AMAT, there we go. AMAT up plus or minus 8 or 9, and there's only 2 days left in the week, so that's for the end of the week. And you can see you're well within that expected move. And someone might say, Tim, what the hell is this expected move, and what does it all mean? So the market maker set that, right? And you can, if you have Thinkorswim, you can find that on your earnings in your options chain in the earnings series. And so, like when I say this is 25.7, plus or minus. That means the market makers have priced the options in such a way, they've made them, i.e. more expensive, that they've priced in almost a $26 move either way. And so the people that win consistently with earnings are the people that sell earnings, not buy calls or buy puts. That's the sexy thing, right? When you get like when you get a UPST, folks, like UPST just knocked it out of the park, right? UPST. One, I mean, look at this move today, right? You bought calls, you're like, I'm a rock star, right? But that's not the norm, okay? And you can see the same thing, by the way, at the dash chart. Like the dash chart, you're kind of just taking a gamble that this thing's going to rocket higher unless you got some information, you know, that we all don't have. But yeah, you feel like a rock star when you buy calls. This is outside of the expected move, up 35%. Just like Dash right now went out at 95. It's clearly up more than 16, which, you know, 16.2, which was the expected move. So, you know, the market makers got it wrong. They do get it wrong, by the way, but about 70%, 72% of the time they get it right. Pretty good odds, right? If you're going to gamble and going into Vegas. It's the way selling options is your best bet. Typically, it's the most conservative thing you can do. Nvidia here, right? Call buyers aren't winning right now. Put buyers aren't winning right now. The implied volatility is the number that's associated with the expected move was 153%, right? And the normal somewhere in 50, right? Like 50 percentage. And so, yeah, they juiced these calls and puts, that, i.e. they made them more expensive. And right now, nobody's winning except the market makers who sold them to you and are collecting that plus or minus $25.7 expected. So hopefully that makes a little bit of sense. If it didn't, look, we're always available to you. Danny's one of the best Tim interpreters there are. Dan at revereasset.com, 855-722-5932, and he can explain anything that I just said right there. So let's look at the Dow. And you know, they all the indices, they all have the same story. You know, you're right, you're pretty close here to the 21. There you go. There's the 21 on the Dow, right? We can look at it on the ATR chart. Where's the, there it is. So this is the 21 right here, or the mean on the Dow, like you're right there. So is this move it? Is this it? And now the battle lines are drawn and we're at a stalemate, or are we going to just start to roll over? And we don't have to. Like if everyone, and just remember, if everyone is bearish, and I don't know if everyone feels bearish, but and well, we can take a look. There is a way we can do this. Let's see if I have it up here. I do. If everyone, how would I know everyone is bearish? Let's look at this, the put call chart. Gosh, I wasn't planning on doing this, but listen, we'll reach into the hip pocket and we'll do some put call work real quick. So this is a 10-day simple moving average, and you can see here, and I talk about the 10-day simple moving average first, because the put call ratio got obliterated with all the money printing from COVID 2020 to 21. So now, what used to be, I was looking for at least 0.1 on the actual ratio itself. You can see we're at 0.78 right here. I found that using this 10-day moving average is a much better indicator. Like you start getting up to close to 0.9, you start seeing some bottoming action, and you can start moving higher. But look, we are lower, right? Isn't risk increased? Has risk increased? Are markets scared? Hard to really tell from looking at this put call. The put call ratio was up here at 1.1, and we had this ascent, like it spiked up here at almost 1.1, and we had this ascending put call moving average over the put call ratio. I say, yeah, like look for a bottom right here. This is really tough to call. This is difficult. If it was down here, I'd tell you it's complacency. It's not quite complacency. Where we are right now, you're kind of in no man's land, and it's kind of where the markets are. They're trying to decide what's happening. So when you're looking, like look at this Dow, you're like, Tim, that's the Dow? There's this gold line's the 200. You know nothing good happens below the 200. I know what you know, but that doesn't mean you can't just scoot up here, take out some shorts, and then roll over, doesn't it? And so I think you just want to be really cognizant of where you are in time and space. And that's why I say the battle lines are being drawn, and it's not super clear. Now look at this Russell chart. The Russell just 24.58 and we're trading 20.79. That's a big move, right? And so, well, Tim, where are your fib levels at? Come on, man. Where's your chart set up? And I'm like, oh, I'll get my chart set up for you. So look, from that high to low, 21.80, right? But what about more recent high to low? Like this move here. Oh, we're like from, and let me just make this a little bit more clear. So and show you what I'm doing. So I have a big move from November to January that I drew out, and it gave you this 50% retracement. And that level was 21.80, okay? But I'm gonna take that off. I'm not sure at the moment how relevant that is, because here, right here, my friends, is the recent high from the start of the year. Look, end of 2021, meaning the start of 2022, that's 2022. And look, we got up to the 50% retracement level and we backed off. And quite frankly, we are not that far away from here. Here's what I surmise. If you get through 2094, you're going to 2140. If you get rejected at 2094 or get rejected here, you're coming down here at 2050, which is another 20 points lower. And so all that's super interesting to me here, where we end up. If you take out, I mean, it's real easy, and I'm looking at this. If you take this level, like, oh, I don't want to draw. I want to get my pen back. There we go. You take out this trend line, clear that 50% retracement level before you know it, Bob's your uncle here. It's the 618, which is 2140, which is a big move for the Russell in this environment, which kind of takes you what? To the zone of the 50-day. So look, I can see a rollover or I can see an acceleration. And to tell you that I know where it's going, it's not a bullish chart, but to tell you I know that it's not going to go up and take out some stops first and then roll over. You know, I think you want to really be careful about making declarative statements like that. But with the one chart I promised you that I really want to discuss, I want to talk about the VIX Futures here. The VIX Futures got a pattern going on, and I find it interesting. We can do this. It's probably a little bit easier to see here on this chart, my friends. So these are the VIX Futures on a daily chart, and you can see that when this is, let me just label where we're at in time and space, the mean, -1, -2, -3, and then here is +1, +2, and +3. And so you can see here, we, since November, we come down to this -1 area, hold, and then we come up to the mean. Sometimes we retake it, sometimes we retake it, but when we retake +1, my goodness, right? Come down to -1, retake it, now we're holding the mean. Is this VIX right here, is this VIX right here the point of acceleration back up or to break down? And I think you want to hawk that. I think that is going to be crucial. Like, because, well, you're like, Tim, no kidding. But you have to understand that we're not up here. And why am I pointing this out to you? If we were up here, and I've done this work with you before, if we were up here, it's 124, right? January 24th, and we're up here at the third ATR. That's the bottoming day in SPX. You don't want to short there. The VIX futures are up here. And if you go back in time and space, look, there's just the last couple of times it hit 3 ATR. Look, even here, 3 ATR pullback, close to 3 ATR, a little bit of pullback, 3 ATR really pullback, 3 ATR pullback, 3 ATR, excuse me, my mouse is all over the place, 3 ATR pullback, and even deeper. So when you hit that 3 ATR, you don't want to be shorting. You want to be thinking, okay, tightening up stops, and maybe the market does go lower, but it's probabilities, man. And so you just want to play the probabilities. And so here, we're at a point of, some might say this is the line of demarcation. This is the line where all the troops are gathering and they're ready to make a move, make a push up to there. Maybe not, could be a fake out. And so you watch this chart, it'll kind of give you direction, and then you will know direction in which to trade. So hopefully that all helps. And with that, Oh, I really did help you out. Any questions, listen, we're always available, 855 Real Wealth. With that, hope you have a great night, and I will see you at the next update.